Hi, my dear friends. Punarvas, Jayakumar here. How are you all? Happy Independence Day to all of you. So, guys, many of you have been asking us, sir, when will you start paper 6 multidisciplinary case study? So, many of you have been buying my classes, buying any faculty's classes. The faculty will do 180 plus hours of classes, and you'll only be looking at one faculty. But paper 6 multidisciplinary case study requires expertise from multiple faculty in multiple areas. So for the first time ever in India, we are very proud to launch this particular product with two other amazing faculty. So I will go into the product details later, but first let me introduce our team here. So we have CA Chinmaya Hegde sir and CMA Tharun Raj sir. We will be handling this paper 6 multidisciplinary case study together. So guys, as you know, Chinmaya Hegde sir is a multiple rank holder, one of the very few people in India to get ranks at all three levels of CA. In CA Foundation, he got All India rank 13. In CA Inter, he got All India rank 3 and is a mathematician also. So 13 3s are 39. So CA final, he got All India rank 39. In fact, in CA Inter, he should have got rank 1, but he was hospitalized due to typhoid for a week. So he just got up from the hospital bed and he went to the examination hall and got All India rank 3. He's an expert in FR and AFM. So he will be handling the two subjects in multidisciplinary case study. As you know, multidisciplinary case study has all subjects of CA final. It has FR, it has AFM, it has law, it has direct tax, indirect tax, SCMPE and auditing. So Chinmaya sir will be handling FR and AFM. So Chinmaya sir is the CFO of a company managing assets worth 1,800 crore. So has in-depth expertise in financial management. Sir, over to you, Chinmaya sir. So how would you be doing this particular subject with all of us? So over to you.
Yeah, thank you, Punarvas. Hello, my dear future chartered accountants. Now that you mentioned about the hospital, this subject is also a kind of hospital. And I also tell the students in the classes that the classes are like, film theater. You go sit and enjoy somebody else's performance. But examination is operation theater. So you need some sort of medicine, some sort of doctor. I think this is the area where throughout the world, multidisciplinary case studies or multidisciplinary hospitals are the requirements. So subjects also have become like that. You cannot expect one person to know only one subject. You need to know the interconnections. And also collaboration is the order of the day. I don't know whether you watch the movies like Jailer, where Rajnikant is the lead and there are people having cameos. I don't know who is the Rajnikant here. I would say subject is the Rajnikant and everybody else are just participants. I hope you get the best use of it and thank you for them having the collaboration. So please make the best use of it. Thank you.
So thank you, Chinmaya sir. Chinmaya sir has been my friend for almost like 15 years now. And one more dear friend of mine who I would love to introduce is CMA Tharun Raj sir. He scored All India rank 1 in CMA. He will not tell that. That's why I am telling. He will never tell that in front of camera or anywhere. CMA rank 1 is Tharun Raj sir. He is, in my opinion, one of the best faculty for indirect taxes in the whole of the country. So he will be handling indirect taxes and SCMP in this multidisciplinary case study subject. So guys, what we have planned, I'll tell you immediately after what getting to know something about the subject and how we are going to handle it from the man himself, the IDT wizard, CMA Tharun Raj sir. Sir, over to you.
Yes. Thanks a lot for introducing me, sir. I'm not that great person and all. So, but this multidisciplinary case study idea, actually, Punarvas sir got it long back. So it's not just today. So somewhere in 2020 itself, so when I got introduced to him, when I started talking to him, I was having certain doubts with respect to law areas because we have law and indirect taxes, two are connected little bit. So here and there. So because indirect tax is also end of the day a law. And being a BERAC decoder, whom else can I ask? So therefore I used to ask him, sir, how to interpret this, etc. and all. And at that time, there was one issue related to director remuneration. The entire country shook by the decision of West Bengal advance ruling stating that directors remuneration will be chargeable to GST. And one circular came at that time. At the time, just I had a conversation with him. Sir, what you feel? Because I don't know the difference between contract of service. So can you please throw some light like that? I asked him. He has explained it so beautifully. Then I said, sir, why can't we do a video on this? That's where the idea of Jugalbandi started. So when this idea of Jugalbandi started, thereafter we had multiple discussions like this, but never we got this like, okay, why can't it become a subject like that? We never thought of that. Thanks to ICI, that they have well thought that to keep a paper which connects all the subjects, because tomorrow after you become a chartered accountant or a professional, you are not going to practice only in the area of direct tax or indirect taxes. So definitely you need to know about every subject, and that too the practical case study point of view. So therefore, as soon as Punarvas sir said me like, sir, why can't we do this with Chinmay sir also? So I was very happy because I know both of them for quite a long time, because compared with anything, the personal rapport is also very much required, the egoless rapport I'm talking about. So therefore, this, I'm very happy to be part of this, and definitely I will do my best. So over to Punarvas sir.
So, my dear friends, this is a unique product. First time ever in India, we are launching. Nobody else has done this. So, we are number one to do it. Very, very excited, very, very happy. So, over to you, Chinmaya sir, to just explain about the features of this product, and then we'll take over with the pricing and other details. Yes, sir.
Thank you, Punarvas. Each subject in CA final is like a different fruit. Different people like different fruits. Somebody like apple, somebody like mango, and somebody seasonal, like we pass in June. I mean, we pass in May and November. The multidisciplinary case study is like a fruit salad, which means you need to know the individual flavor and you need to know how to have a combined flavor of it. So the course is structured such a way that each of our faculty, we are going to cover our respective areas. Let's say 20 to 25 hours of each subject revision. That will give you the overall view of individual subject and its flavor. And the combined flavor, the fruit salad flavor, we will do it by way of sessions like this, where all of us will come together and we will cover the case studies, covering about 80 to 85 hours. So totally it will have about 180 hours approximately. So we are doing all our bits possible. We are doing individually, we are coming together. Only thing what you have to do is listen, go to exam and write it. That's one thing ICI is not allowing us, so we are not able to do it. If given a choice, maybe you would have gone to that section as well. Anyway, more details, Punarvas will tell.
Thank you, Chinmaya sir. And students are like the ice cream. Fruit salad is incomplete without the ice cream. Right?
Absolutely, that is the final.
So that's a rich vanilla ice cream. So thank you so much. Friends, this product will be priced at 9,000 rupees plus GST, and all three of us will be there as he told. So it will be individual, subjects will be talking, and more about the subjects. Sir will be handling FR and AFM. I will be handling law, direct taxes, and auditing. In fact, many of you probably may not know, I started off as an auditing faculty many years ago, but then moved into direct taxes also for a couple of batches, and then stuck to law. So all my three loves are there, all my three girlfriends, law, DT, and auditing. So it's going to be nice to handle that. And of course, our IDT wizard will be handling indirect taxes and SCMPE as well in this particular subject. So it will be 9,000 rupees plus GST, and as sir mentioned, it will be 180 plus hours of classes. So roughly around 100 hours plus 80 hours of case study discussion. So 1.5 views, my dear friends, and 6 months validity. 9,000 plus GST will happen, after September 1st. Till September 1st, we have an offer to you. There's an Independence Day offer, 7,500 plus GST. That is the pre-booking price. But in order to book that and block that price, you need to pay 1,500 plus GST. All the numbers, etc., will be in the description, website, etc. It's already listed. You can check it out there. No problem. The numbers, you can call them up. It will be hosted both on our website and THARUN'S website as well. So you can, of course, eventually it will go to other players as well. Nothing to worry. All the details are secondary. But yes, the pre-booking price of 1,500 plus, if you book now, you will be getting access from November 1st. Yes, we will be starting recording very soon. Everything. So it's an open book exam. So I always tell, because I was handling paper 6D, in an open book exam, we should know what to open, right? Which book to open, which page to open, what to see. So the thing is, we racked our brains, did some brainstorming and figured out how many books to give. 3 books, 4 books, 5 books. It shouldn't be like you're sitting in the examination hall opening some 7 books there. It's like a, South Indian meal. Everything there, all the items are there. So what to open, what to see. So we have devised a plan, and Tharun sir will tell you about what books we are giving and how this entire thing is going to be a game changer for you, because my dear friends, paper 6 is part of group number 2. You have DT, IDT and paper 6, 3 deadly subjects. And we also have a combo for group 2, which details will be shared later. Right? We have a combo, we have offer for that also. The entire DT will be handled by me, IDT by Tharun sir, and of course paper 6 by all 3 of us. So group 2 is going to be a game changer. Questions are going to be tough, my dear friends. It's not going to be a cakewalk. As you know, it's you are trained to become a global chartered accountant. So things are going to be difficult. But we are here for you to make it easy. Don't worry. As I said, it's going to be fruit salad, as sir told, with vanilla ice cream. Over to you, sir, about the books and other things, how we brainstormed and how we figured out at the final optimum thing to do it. Yes.
So actually, no, I had one insider information. So I really don't know whether it is correct or not, but this is from a concrete source that paper 6 is an open book system, but we cannot take it for granted. And at the same time, group 2 is going to be very, very, very difficult. And ICI is going to show what they are capable of. Already they have been showing. And now the reason is there because group 1, there are 3 subjects. Whereas in group 2, actually closed book is only 2 papers, that is DT and IDT. And this multidisciplinary being an open book system. So what will happen here is that, the students will be allowed to take the book. So which means ICI psychologically thinks, okay, let's make the other 2 papers difficult, that is DT and IDT. Now group 2 is going to become a nightmare for the students. So now you have to start your preparation as early as you can. If you are appearing for May 24 or November 24, the early the better. Okay. And now when it comes to this paper 6 multidisciplinary, so 2 books. Actually we thought of giving multiple books, but as Punarvas sir rightly said, so we cannot keep all the 7 books on the table because even we don't know which exam center you will be writing, and there they will allow that many books or not. Really, we are clueless. So we are making it into 2 books. The first book is a concept book wherein all these 7 subjects, summary will be given in that book with proper indexing. So we are really going to put our brains into it and we are going to make it a wonderful book, which is a multicolored one with proper indexing and interlinking everything. Then the second book will be a Q&A book, that is all the case studies which we 3 are going to discuss. So those case studies will be incorporated into that. So right now we have selected 40 plus case studies. So these case studies will be incorporated and they based on ICI, which is going to give the study material or some mock papers, that also will be incorporated into this discussion. And as soon as that gets completed, you will be making it, we will be making it available along with the lecture to you.
So friends, you will be wondering, so how will we doing, all the 3 of us, how will we be doing this particular case study? So here is what one snippet of what we will be doing. So we thought we'll just record this as well because you'll have a peek into what exactly or how awesome this is going to be. You really are going to enjoy. So first, I will just pick up a case study. I'll be reading the case study now. So each para, generally a multidisciplinary case study paper is such that around 7 to 8 paragraphs will be given, followed by MCQ questions and followed by descriptive questions. And this will have from all the subjects mixed. So, and some of the questions may be easy, some of the questions may be difficult. So what we are going to do is very simple. First, we'll read the case study. Each of us will be discussing what areas in our particular subjects may come from that particular paragraph in that case study. And then we will go through the questions, MCQ questions and the descriptive questions. And apart from the questions there, we'll also discuss what other areas they may ask. Now that question may be very easy. What if a difficult question may come? How to tackle that? All those things, guys. So without further ado, let me dive into this question which you are seeing now. I'll be discussing para number 1. We'll just be reading para number 1 and then we'll be moving on. So here you go. So first, Upal Limited is a public company, hereinafter referred to as the company. So in the question, wherever it says the company, it is this Upal Limited, which is listed in both NSE and BSE. So dear friends, it is a listed company having a paid up share capital of 600 crores with 20,000 shareholders, incorporated since 2004, and the company got listed in 2012. So basically it started off as a private company or an unlisted company, and 8 years later it went in for listing. the company avails certain services from a sub-service organization named Parupasna HR and Accounting Services Private Limited, and that are part of the UPAL Limited's information system relevant to financial reporting. The company was required to pay a penalty for a breach in the performance of a contract with Parupasna HR and Accounting Services Private Limited. UPAL Limited believed that the penalty was payable at a lower amount than the amount demanded by the other party. The company created a provision for the penalty, but also approached the arbitrator with a submission that the case may be dismissed with costs. The company prepared the financial statements for the year 22-23, which were approved in May 2023. The arbitrator in April 2023 awarded the case in favor of UPAL Limited. As a result of the award of the arbitrator, the provision earlier made by the company was required to be reduced. The arbitrator also decided that the cost of the case should be borne by the other party, that is Parupasna HR and Accounting Services Private Limited. So guys, this is just the first paragraph of the entire case.
Okay, PJ sir.
Yes, sir.
There are 3 questions in this para 1.
Okay.
First, what is the difference between fine and penalty?
Okay. Okay. So, thank you, sir. So, basically, let me take from the context of Companies Act. So, in Companies Act, if they use the word fine, it means it is, paid to the court, that is National Company Law Tribunal. But when the Act uses the word penalty, it is paid to the internal adjudicating mechanism, that is the ROC or the regional director. So, wherever the Act uses the word penalty, it is less stringent in terms of, amount of payment and even the process, etc. But if it is fine, it is more stringent, so to speak. So, in 2020, in fact, Nirmala Sitharaman madam changed almost from 50-60 sections where the fine was converted to penalty. So, basically, she decriminalized company law.
Okay.
So, in the context of this question, here penalty means predominantly for breach of a contract. So, here penalty means breach of a contract. So, the reason why I told company law also is, if company law question comes where they have told about fine, the answer should be NCLT. But in this question, it's not needed. In this question, it is penalties for infraction of the contract, contravention of law. So, one company should pay to the other company. So, that is how it is.
Yes. And because even in indirect taxes also,
Yes,
so in offenses and penalties, so for imprisonment, wherever imprisonment comes, they use the word up to 5 years plus fine.
Yes, sir.
And up to 2 years plus fine, like that.
Right.
Whereas in some other places, they use the word penalty.
Penalty.
Like you breach some provision, you have to pay penalty. So like many times the students also will be asking me what's the difference between fine and penalty.
Correct.
But according to my view, what I feel is that penalty is defined, but nowhere fine is defined.
Yes, sir.
Because actually penalty amount is also given.
Yes, sir.
Everywhere this is the breach, this is the amount payable.
Yes.
But fine is not given anywhere. And as you have given me a clarity now, I personally feel that now I understood, because wherever imprisonment comes, there only fine.
Yes, sir.
And imprisonment is imposed by court.
Yes, sir.
So which means court only will fix the fine.
Perfect, sir.
Correct?
Perfect. And also you would have seen the wordings, it says fine or imprisonment or both.
Correct.
So the thing, so if the severity of the entire infraction is higher, then it will be both. Perfect, sir.
So which means someone court or some other tribunal is going to fix that
Perfect,
amount.
sir. Perfect.
Fine, sir.
Yes, sir.
Then the second question to you is that what is a sub-service organization?
Okay. So basically, I'll give you an example. Let's say you are a company who is into software services. You cannot look after the accounting part of it. So generally what we do, we outsource the accounting part of it to somebody.
Okay.
So let's say I am the auditor of that software organization. Let us suppose Infosys, for example. So if I am the auditor of Infosys, and let's say Infosys doesn't have a accounting division, it's an example. So they have outsourced that accounting division to somebody.
Okay.
So that somebody, let's say it has outsourced it to Infosys BPO. So we have business process outsourcing.
Yes.
So Infosys Limited has outsource the HR division, or it has the entire accounting process is given to, let's say, our Infosys BPO. Infosys BPO will be called as a service organization.
Okay.
So the issue is, an auditor of Infosys Limited, he has to get reasonable assurance about the affairs of the company. But a major part which will affect the finances would be the accounting.
Yes.
So how would he audit that? is given in a standard SA 402, which speaks about service organization and sub-service organization.
Okay.
So if that service organization, let's say Infosys BPO, uses further services from somebody else, for example, to maintain all the records of the employees of Infosys Limited, they will hire AWS server, cloud computing. Okay. So that will become a sub-service organization.
So can we say that sub-service organization is a vendor?
Yes.
Vendor.
Yes.
But
like a vendor.
definitely there will be a difference between vendor and a sub-service organization.
Yes.
Maybe if I'm like understanding the controls of my particular client,
Yes.
what are the internal controls they are using, and my internal controls are mapped to their internal controls, I feel sub-service organization.
Yes.
Otherwise, mere vendor. Even an electrician is also a vendor.
Perfect.
Or some other repair person is also a vendor.
Perfect.
So sub-service organization is a little connected, more connected into their organization.
Definitely, because it should be part of the entire setup, part of the entire information system mechanism.
Okay.
Because I need to have access to that. The here predominant thing is, how will an auditor, a statutory auditor of Infosys Limited, how will he figure out whether the controls are matching with respect to the vendor? So that is where SA 402 comes into play.
Done.
Yeah.
Done.
Yes,
Understood.
sir. Yes, sir.
Then the third question related to this paragraph
Yes,
one is, what is arbitration?
Okay. Sir, basically in India, there is a lot of delay in this entire court mechanism. Basically, if you and I are suing each other, we'll go to the court for 10 years.
That
15 years.
should not happen.
It will not happen. Sir, I'm just saying, it'll go 10, 15 years, we'll be going, and at one point of time, we'll become friends there.
Yes.
Because the court will say, again, you guys have come, go have coffee and come. That's how it's going to be. So rather than that, it is a lot of cost, lot of delay. Now, there's an alternative dispute resolution mechanism, which is called arbitration. In simple words, you would have watched the movies, any panchayat scene, in all or Telugu movies, Tamil movies, Kannada movies. The hero will come, will lift his lungi and put here, and then two lions will come from behind. So basically all wind blowing everywhere. He will sit in that panchayat katte and he will deliver a decision. That is nothing but arbitration. It's an alternate dispute resolution mechanism, but in this question, obviously it can't have like all this lungi and other things.
Correct.
So here it is basically retired High Court judges, Supreme Court judges are arbitrators.
Yes.
Anybody can be an arbitrator, sir.
Yes.
So, but the thing, of course, we would also look at.
Sir, in this actually,
Yeah.
in indirect taxes, there is some point related
Yes,
to
sir.
this.
Please, sir.
Arbitrator services to business entity is actually covered under taxability. We
Okay.
have certain exemptions
Okay.
also. But I have one doubt here.
Yes, sir.
Can an arbitrator practice as a firm?
Okay.
So usually what I saw was that arbitrators will be individuals, as you rightly
Right,
said.
right.
So usually Supreme Court retired judges or High Court retired judges, because they will actually register with the Bar Council
Correct.
as arbitrator. So, but I did not come across any firm of arbitrators.
Right.
So, do you come across any such?
Sir, I have a friend, in fact, who is actually one of the topmost arbitrators associations in Bangalore. They are also a law firm, very good law firm. Of course, I cannot name them, but they also have associations of these arbitrators. So they have association of persons coming together who will run these arbitrations. So if there is a list of arbitrators, you can go and choose whoever you want.
Okay.
Because in arbitration, the best part is if you and I are fighting, both of us can choose the person who is going to judge.
Okay.
And the best part of arbitration is the arbitrator's judgment is final, sir.
Okay.
There is no appeal.
Okay.
There is only appeal if you feel there is bias.
Bias.
Otherwise, there is no appeal.
And I heard one more thing, that two parties will appoint one arbitrator.
Yes.
And individual also we can appoint one arbitrator.
Yes.
Is it right?
So basically, it's in odd numbers, because if you and I appoint one each, those two will start fighting.
Correct.
So it's going to be either 1 or 3 or 5 like that.
Okay.
So I can appoint one, you can appoint one, and those two can appoint one more, or it will be just one.
Yes.
1, 3,
so
5.
this is actually what is there in the law
Yes,
as panel of arbitrators.
Yes, sir. Panel of
Panel of
perfect.
arbitrators.
Panel of it's either it's called arbitration tribunal, that is one person actually,
Yes.
or a panel of
Panel of
arbitrators.
arbitrators. Actually, that's the definition.
Yes, sir.
Arbitral tribunal services to business entities.
Yes, yes.
Arbitral tribunal definition is individual arbitrator or panel of arbitrators.
Perfect.
So now,
So this is as per the Arbitration and Conciliation Act, which was there as part of paper 4, which Institute has removed and made it into the self-paced module. These are all important concepts, my dear friends. So please see, that's what you felt was left out is all coming there. See, the question and answers may be easy, but you should know, overall how it will be. So that is how it is.
Yes, sir.
Yes. Thank you, sir. So yes, friends. So now let's quickly discuss what all areas in law, DT, and auditing. They may ask about the service organization, of course. They may also ask about penalty, and of course, from the law point of view, the arbitration will come. So I just want to ask Tharun sir, in IDT and SCMPE, what all questions may come? We will discuss the questions later. What have they asked, but what may come, sir, according to you in this area? What can an examiner ask in this para number 1?
Yes.
Yeah.
Sir, first aspect, if we see in this para 1, there is something called as penalty. Penalty which is collected
Right.
by one organization from the other organization in pursuance of a contract.
Right.
Also, it is clearly given that one organization is going to tell that we don't have to pay this much penalty, we have to pay, which means penalty is not decided.
Correct.
Fine or penalty not decided in the contract. That's
Right.
what we can observe from
Right,
this.
right.
So when the fines and penalties are not decided in the contract, definitely it will not come under the category of liquidated damages.
Correct.
So because liquidated damages means only when I'm breach a particular condition. When I'm breaching a particular condition, for that you have to pay this much amount, then only it will be called as liquidated damages. Because in GST there is one circular related to this,
Okay.
that whenever liquidated damages or any compensation that is being collected by one person from the other person,
Okay.
it will be divided into two.
Okay.
First, is it specified in the contract?
Okay.
If it is specified in the contract, again it is divided into two.
Okay.
That is it like a penalizing a person to ensure that he is not repeating that?
Okay.
Then it will not be treated as consideration. Don't charge GST, even if it is mentioned in the contract.
Okay.
But it is to discourage a person from doing. For example, fines and penalties which are imposed by traffic police is not to encourage a person.
Correct.
It's not like you pay 1,000 rupees, cross the signal, hit a person and go.
Yeah.
It's not that intention.
Punitive in nature.
Yeah, punitive in nature.
Right.
So which means that will not be, even though it is specified in the contract, but don't treat it as consideration, no need to pay GST.
Correct.
Whereas in the ordinary course of business, okay, this will happen. But when it happens, you have to pay this. Usually construction contracts and all. So there is a timeline. So if you cross the timeline, you have to pay this much amount.
Correct.
So even they will understand in the practical sense, there will be some delay. So that particular penalty, etc., whatever it is, that will be treated as consideration and chargeable to GST
Okay.
at the rate applicable to principal supply.
Oh.
So which means if the main activity, that sub-service organization contract,
Right.
if the main activity is taxable, even this fines and penalties also will be taxable.
Okay.
If the main activity is exempted, this activity also
This
will
is
be
the HR
exempted.
services, so HR will be taxable
Exactly.
anyway.
HR activity is taxable.
Right.
So therefore, even that fines and penalties also will be taxable.
Okay. Sir, in
But
DT
here, one more aspect.
Okay.
As it is not specified in the contract, here we are discussing all these things only when it is specified in the contract.
Right.
As the amount is not specified in the contract, and that's why they are going for arbitration, etc. and all. So according to me, definitely it should not be taxable at all.
At all. Okay.
Because it will not come into the category of liquidated damages.
Super.
This is like mere compensation in nature.
Yes.
Mere compensation in nature will not be treated as
I
consideration.
was coming to that, sir, because in DT there is one penalty, penal in nature, compensatory in nature. If it's compensatory in nature, it's actually allowed.
Yes.
If it is penal in nature, it is not allowed.
Correct.
So great. So that is how it works. Fine.
Yes. And one more area what we have in this is that arbitrator services.
Yes.
So there is an arbitrator who has been appointed. So usually arbitrator services to a business entity whose turnover during the previous year exceeds the threshold limit for registration. Now that they are making big business and all, so definitely they are liable to get registered.
Right.
Their aggregate turnover during previous year would have exceeded threshold limit.
Right.
So this arbitrator services to that company will be taxable.
Okay.
Whatever money that arbitrator collects.
Okay.
And this will not be taxable under forward charge mechanism.
Okay.
So this will be taxable under reverse charge mechanism, where liability to pay GST is on the recipient. So means this company, so which is paying money for the arbitrator, so that company has to pay GST under RCM. That is one aspect. Then another aspect what we have when it comes to costing, that usually fines and penalties are abnormal costs in nature.
Right, sir. Right.
So as per cost accounting standard 11 also, this abnormal cost will not be treated as administration overheads.
Okay.
So it should be charged to costing P&L. It should not be absorbed by the overheads.
Great.
So these three areas are there in this paragraph.
Amazing. And also, my dear friends, for arbitration, one more point I would like to add. If the arbitration clause is not there in the agreement, you cannot go for arbitration. It will be void. So here we are assuming that the arbitration clause is there. So clearly you should mention in the contract that in case of any dispute, both the parties will go to an arbitrator. So that agreement has to be there. That clause has to be mentioned in the agreement. So thank you, sir, for your inputs. So I hope you understood, my dear friends. So guys, in one para, we have discussed so many things in these subjects, but then you will be wondering, will there be anything in FR, AFM left? The best person to ask that question is our expert, Chinmaya sir. Sir, what areas they may ask in this paragraph in FR and AFM in your opinion, if you were the paper setter?
Yeah, thank you, Punarvas. I should really thank ICA and the faculties here. By reading this paragraph, I am able to get a lot more ideas into it. I think I should have had this subject also when I was studying. I think I would have been in a different place by now. But anyway, first thing, take a deep breath, forget whatever happened. No law, no tax, no GST. Come out of that world. Now we are into the world of there are no rules. Focus on only concepts, substance over form. Coming to the FR part, what is essential in this regarding is regarding the penalties or charges, whatever the expense paid may be. The discussion was regarding when the amount was paid. If you closely look at the paragraph, there were a discussion of payment being done or the discussion of the case being filed in this financial year. The accounts were approved in the month of May. And this will be a typical case scenario for event occurring after balance sheet date. So as on 31st of March, the case is still pending, but decision was about later.
Right.
In between, the decision came in. So should we take into the account of the previous financial year? The answer is definitely yes, because the word used is a condition existing on balance sheet date.
Right.
And the condition did exist. So simple answer, there has to be a provision, an amount reduced and reduced amount only should be taken. The second point to be kept in mind is whatever the legal charges the lawyers paid is reimbursable by the other company against whom the case was filed from. So this takes the character of a reimbursement, and this is called as contingent asset. As per Ind AS 37, contingent asset can be recovered provided it is virtual in nature. In this case it is, but virtuality comes only when the confirmation is there. The court rule is you have to recover. So it will be disclosed as a contingent asset. Subsequent year, when the confirmation is there that you are going to recover, they have given the approval, you can recognize it as an asset. So Ind AS 37 is what is going to be applied, and little bit of numericals. I think DT, the section 37 talks about general expenses.
Right.
Ind AS 37 talks about the provisions and liabilities. So you can remember both the sections together. So DT and
Amazing.
the Ind AS 37. There are a lot more, so we'll come to it over a period of time.
Now we know why is a multiple rank holder, that really clearly understood how it is.
Yeah, and one more area, as and when we speak, I got to know, but I could one thought flashed in my mind, and that is on SFM. You talked about finance penalty charges. For me, that does not matter. The something is paid beyond the law, which is not supposed to happen.
Correct.
Or not expected in a regular course of business. So when we value certain companies, we look at the future profitability of it. How much the profit can be repeated. Future maintainable profits. So while calculating those profits, these expenses are non-recurring, so we don't take it into account. That is one. And the practical experience I'm bringing in is a different element, not required for exam, but you should keep it in mind. When we manage our client's money, or we taking care of the client's money, when we evaluate certain companies, there are various parameters. One of the parameters is, have they paid any fines? If they have paid any fines, we would like to be away from it. There will be some regular charges also, like some irregularities will be there. You file the tedious returns late, you pay a charge. That is not a serious one. But if you go to a court, some criminal charges against the director, and you have some out of the court settlements, we would like to stay away from those kind of companies, because when we manage somebody else's money, it should go into the hands of people who can trustworthy in nature. So that is one more area I could think of SFM and FR. So I should really thank ICI. I'm looking forward to more questions of this.
Great. So my dear friends, it's just one para. So hold your breath. There's still a lot more to go. It's just para number 1. So guys, as I told you, all these questions may not come in the actual exam, but we should know what all they can ask. So when we study at a slightly higher level, any question they can ask will be in a position to answer. So you guys have already studied each of these subjects in whether self-paced online module or the actual subject. But this is a amalgamation, so to speak, of everything and merged into one beautiful, set of questions paper whereby you will be tested on all these things. This multidisciplinary case study is the way of testing in Canadian CA, US CA, all these things. This is how GPA, all these case study questions only will come. So this is the right way to study, and in fact, this is not scripted, to be honest with you. It's extempo. When I am talking about something, I am getting some more ideas. Tharun sir is getting more ideas, and Chinmaya sir just spoke about 2-3 new things. So when we discuss, we'll get to know more points, and we will give you the best possible product.
Okay, friends, let's go to the next para. The company pays sitting fees of 25,000 each to its 10 directors per meeting. Further, there are 2 directors who are in the executive roles and withdrawing 2,10,000 each per month as salary from the company, and the applicable TDS amount under section 192 of Income Tax Act is deducted from such salary. So this is a DT area. A board meeting was held on 19 January at the registered office at 4 p.m. The agenda of the board meeting was to increase the sitting fees of directors and sale of one of the undertakings of the company. Again, this is also a law area. The board of directors of the company decided to raise the payment of sitting fees for each meeting of the board of directors to a maximum of 40,000 by altering its articles of association. In view of the board, from the last 1 year, there had been an increase in the work responsibilities of all the directors, including women directors, Ms. Rima and other 2 independent directors. Hence, it was necessary to increase the sitting fees. So they have given some justification for the purpose of increasing the sitting fees. And the articles of association of UPA Limited contain a provision by which directors are empowered to sell or otherwise deal with the property or undertaking of the company. So directors are empowered to sell. So we need to ask Punarvas sir, is it right or wrong? The board was of the view that the sale consideration received from selling the undertaking would be used to clear off the part of existing term loan. So this we need to ask Chinmaya sir, is it a good financial management aspect? So therefore they are selling the assets and paying off the existing term loan availed from BKG Commercial Bank. However, except Mr. Shyamlal and Mr. Ramesh, who objected to selling of the company's undertaking, all other directors were in favor of the said sale. Now, so let's ask Punarvas sir, so few questions sir.
Yes sir.
Here, about the TDS 192.
Yes sir.
So why director sitting fees will come under 192 only? So is there any other section of TDS, is it possible?
Yes sir. So basically sir, it all boils down to one thing, how the contract is entered into. So there are 2 things, contract of service and contract for service. If it is contract of service, it is employment. And contract for service would be as a consultant.
Yes. Sir, sorry to interrupt you.
Yeah.
How to distinguish this?
Sir,
Contract of, contract for?
Yeah. So basically it will be mentioned in the agreement, sir. So if you have, perquisites, if you have the salary component, but here the key word here is executive. So any person who is an executive director, there is, first of all, in company law, there is no distinction, there is no word called executive director.
Oh.
There is no word called professional director. There is only directors.
Okay.
Right. So, but this is in normal parlance and the way the business agreements are drafted. In the agreement, if it is clearly mentioned that you are employed in the company, or they would have mentioned you are hired as a consultant in the company. So that is what we need to see. The employment terms will be mentioned, that is a contract of service. The contract also will have that term. This is a contract of employment.
Okay.
Or rather, this is a contract for consultancy, right? Okay. So if contract of employment comes, so then obviously you're an employee. Executive director basically works full-time in the company. So as per company law, any director should be appointed through an agreement, of course, has to be there. Okay. And of course, through a shareholders resolution or in some cases board resolution. That is a different discussion altogether. In this question, they have clearly mentioned it is they are executive directors, which means they are employees. Yes. That is why they have deducted TDS under.
Even there are some independent directors as well.
Yes, yes. So independent directors also are, cannot be employees, because as per independent directors provisions as per section 149 of the Companies Act, they cannot be employees, they cannot work full time in the company, they are professional directors.
Okay, then in that case, when they are not employees, it should not be contract of service.
Yes sir.
So it will be contract for
For service,
service.
yes, sir.
And sir, related to this contract of service for service, is there anything in direct tax income from salaries?
Yes, sir. So basically, income from salary, this, if it is contract of service, this will be obviously taxed in the employer-employee relationship. So TDS under 192 will come. Otherwise, it will come under 194J, professional and managerial services, because he's giving a professional service.
Okay.
That's how it is. So since it is professional service, he can also take, I mean, from the independent director's point of view, it will be income from PGBP.
Yes.
Right. So he can do.
Can we put it in IFOS also?
It can, sir, depends on how he has been appointed. See, for example, sitting fees that are, there are two aspects to it. One is sitting fee, one is remuneration.
Correct.
So if he is getting the remuneration part, this generally will be in the PGBP.
Okay.
But sitting fees depends on how he is appointed. So generally, managing director and whole-time director, etc., will not get sitting fees, because
Okay.
since they are getting remuneration, sitting fee will be part of it.
Okay.
Even though the section 197 says, 197 of Companies Act, now I have to tell Companies Act or Income Tax Act, since 197 of Companies Act says that sitting fee should be excluded from the remuneration, but still the normal thing is, sitting fee concept is basically for those people who are not working full time,
Okay.
but they are coming 3 to 4 times for the board meeting, giving their time. So giving their time, they are getting sitting fees.
Okay.
So that is anyway part of the entire deal. So for them, it is of course, they are doing that business many places. So it will be PGBP. But there's one more thing, sir. For example, Mr. Narayan Murthy was a chairman emeritus.
Okay.
Chairman emeritus. He was not exactly a chairman, but he was an honorary chairman of Infosys.
Oh, okay.
So for that, they were giving some money. That will come under IFOS, income from other
Okay,
sources. So it depends on the nature of the agreement where it should come. If you are a director, if that is your business, it will come, under PGBP. But predominantly, the sitting fees, other part of it will come under income from other sources, specifically for people like Narayan Murthy, if the chairman emeritus, etc.
Okay.
Same with the, to link one more thing, Keyman Insurance.
Yes.
So Keyman Insurance policy is taken by the company for all the key managerial personnel in the company. So any lump sum amount received also, if you are, an employee, like contract of service, it will be chargeable in the hands of employee. That is
Okay.
in the hands of executive director,
Okay,
lump sum amount.
Okay.
If you are a contract for service, taxable under PGBP. And if you are a chairman emeritus, it will be taxable in the hands of the person under IFOS.
So because sir, actually in GST also there is one issue related to
Okay,
this.
okay.
So whether the director's remuneration or sitting fees or by whatever name called, okay. So whenever the money is received by the director from the company, should it be chargeable to GST?
Correct.
So that aspect.
Yes.
So in that there is one exclusion from supply.
Okay.
That is services by employee to employer in
Yes.
the course of employment is
Okay.
excluded from supply.
Okay.
So many times I will be telling because already they are paying salaries, on salaries lot of
Right.
income tax.
Right.
So maybe for that reason they would have given this exclusion here. So now this particular remuneration which is received by the director from the company, so is it excluded from supply or not is the discussion.
Yes, sir.
So that's where, what we have on point is that
Tell me, sir.
if the remuneration given by the company to the director is chargeable to TDS under 192,
Okay.
then that remuneration received by the director will come under salaries.
Okay.
So it will be excluded from supply for GST.
Oh, super. Okay.
So
Got
it will be excluded from supply for GST. However, if the remuneration which is paid by the company to the director is chargeable to TDS under 194J,
Yes.
means it's not like an employee category.
Correct.
So therefore it is like a professional services.
Correct.
So then it will be coming under supply. Because what was excluded from supply is employee to employer only.
Perfect.
That too in the course of employment.
Perfect.
So this aspect is not excluded from supply. So therefore it is covered under supply.
Correct.
When it is covered under supply, then it will be chargeable to GST. And again here, who will pay GST on this particular remuneration? It is a company which will pay
Okay.
under RCM.
Okay. So, sir, it will be 18% only, no?
18%.
So basically, like if that one guy is getting 1 crore, so
Yes.
18 lakhs extra they have to pay. Is it? Am I right?
The company has
Company
to
has to pay extra.
But of
So
course, company can take it as input tax credit.
Yes.
And it will again adjust with their liabilities, whatever future liabilities that they have, they can adjust. So it will not be literally cost to the company,
Correct,
basically.
correct.
So they have to pay it.
But there will be cash outflow of 18
Time value of money.
Time value of money. Yes. Sir.
Yes.
That way, the sir will come to it.
Yes.
Great.
So that aspect is there.
Yes.
And then one more query to you, in this, they are referring to TDS 192 only.
Okay.
So why they are not referring to 194J?
Yeah.
So that I think there is some error that could have happened.
Correct, sir.
So because sitting fees, as you rightly said, sitting fees means the moment it is sitting fees, it is not paid to the executive directors.
Correct.
So it will be paid to the independent directors.
Right.
So then the TDS should have been under 194J.
Right.
Correct,
right,
sir?
Right, sir. Right.
Yes.
So here in the question, I think, yeah, they have given executive directors also and independent directors. Yeah, they could have added 194J also.
J
Right,
also, yes.
right, true, true.
And then one more question to you
Yes, sir.
regarding this, that then articles of association, they are taking some decision that they are empowering the directors to sell the assets and using that assets to pay off the loans.
Correct.
Is it really possible through articles of
I'll come to
association?
that. So basically, sir, we have to go to, that's a very good question actually. So this generally, most of the students don't know because they would have, I'll always say, deemed to have studied the Inter.
Yes.
Because in Inter, they just mug up certain things and come. This is actually part of Section 6 of Companies Act, which says that the articles and memorandum of association, definitely they are the constitution of the company, but they cannot override the act.
Okay.
The act is supreme.
Okay.
So whatever powers are given, so there is one more section called the Mother Section of Companies Act, that is 179, powers of the board, where they say the board of directors can do whatever the company could have done if company had brains of its own. Now company doesn't have brains of its own. Brains are directors.
Correct.
So board of directors can do whatever they want, but it has a proviso, an exception which says they cannot do those things which the shareholders can do.
Okay.
And the shareholders' powers are clearly given in the BEAR Act, in the various provisions of law.
Okay.
Now, this particular question of selling of undertaking is given in 180, section 180 of Companies Act, subsection 1, clause A. So it says the sell, lease or otherwise dispose of the property of the undertaking of the company.
Okay.
So there they say if you want to sell the undertaking, two has to happen. One, board resolution has to happen. Second, a special resolution has to happen.
Okay.
Special resolution always happens in the general meeting.
Yes.
So 75% majority has to agree.
Correct.
And board resolution should happen because I'm selling the undertaking. Now in this question, one interesting thing is there that many people agreed except two directors.
Two directors.
So the next question comes, I told you board resolution and special resolution. First of all, in the special resolution hasn't happened. And this is obviously a violation of the law because you cannot say board only can do it.
Correct.
Because the 179 says board cannot do those things which the law says shareholders should do. So here in 181 clearly says shareholders have to do it.
Correct.
So the special resolution is not taken, so it is invalid. Second question comes, let's assume that is not even there. For example, board when they pass a resolution, should it be like simple majority or should it be unanimous? Unanimous means everybody agree. But in this particular 181A, law is silent. Law just says board resolution. So when law is silent, when law doesn't talk about unanimous, then it has to be simple resolution.
Simple resolution.
So even if two people have not agreed, it's okay. As long as majority, I think there are 10 directors,
Yes.
in which 2 if they have not agreed, 8 they have agreed, means resolution is passed.
Passed.
On the other hand, let's say if I want to like give an intercorporate loan, where one company is giving loan to one more company, then as per 186 of Companies Act, they have used the term unanimous resolution. Means all the directors present in the meeting should agree.
Okay.
But this is not that case. So thankfully, board resolution is valid because 8 out of 10 directors have agreed. Sir, but is a violation of section 6 here and 179 because power and 180 also because power has clearly been given to the shareholders to do it, and here they have not taken special resolution. So this will be definitely invalid. So that is one more thing that we can discuss from this.
Fine, sir. So these are my questions.
Great. So these are the areas that we can think of. So now we'll probably move on to Chinmaya sir and understand the other areas. Sir, anything else in GST before we move on? Anything else in GST that we can think of here?
Yeah.
And one more thing, sir. Selling of undertaking. When I sell an undertaking, so basically it's like selling one entire part of the business. For example, if ITC has a tobacco division, if they sell the tobacco division, then that's how it is.
Yeah.
One part in DT I will link and then I'll ask you the same thing. So that's called slump sale. In a slump sale, you can sell off an undertaking. So in the, when you are doing the depreciation calculation, you have to subtract the WDV of those assets of that particular tobacco unit completely, if it should separate it, and taxation will be as per capital gain,
Yes.
all that we will see. Sir, anything GST component on slump sale?
There is one aspect, sir.
Okay.
As per section 12,
Okay.
section 11, read with notification 12, 2017, there are some list of exemptions.
Okay.
In that exemptions, they have given one exemption that, sale of business as a going concern.
Okay.
They did not use the word slump sale
Slump
actually,
sale,
but they said sale of the business as a going concern, either whole or part thereof.
Okay.
will be treated as exempted supply. So no need to pay GST on that, which means on the sale consideration, whatever we get, we don't have to pay GST on that particular sale consideration. So here slum sale is actually part of the undertaking,
Yes, sir.
right?
Yes.
So then that is covered here, even as a whole also, like in mergers, amalgamations, etc. When I transfer the business, but with specific provision for transfer of liabilities, then only it will be called as transfer of business.
Yes, sir.
So transfer of business is a going concern, does not mean sale of brand name or sale of assets.
Okay.
So transfer of business as a going concern, lock, stock, barrel.
Yes.
Then whatever money that I get, that is exempted. However, if I sell the assets, I will repay the liabilities and I sell the assets.
Okay.
Or I will sell the assets and repay the liabilities.
Okay.
Or I sell the brand name or the intangibles, etc. That will be covered under supply chargeable to GST.
Oh, okay.
Only transfer of business as a whole or any part thereof as a going concern is exempted. One more aspect here, when we transfer the business, we have one section which says that section 17 subsection 3 of TGST Act says that ITC, whatever is there unutilized in the transferor's credit ledger, can be transferred to the transferee.
Okay.
So transferor has to file one form ITC 2, like that one form is there. If they file that form, whatever ITC that is there in the electronic credit ledger, usually electronic credit ledger is not maintained by them. It will be maintained by the portal, GST portal on behalf of the registered person. So I cannot transfer it. So I need to make a request to the portal, but the portal will transfer it to the transferee. But to transfer this ITC, transferor and transferee should be in the same state.
Okay.
So which means if the acquisitions happen in the other state, like I am located in Tamil Nadu, but the acquirer, that is transferee, is located in Maharashtra, ITC cannot be transferred.
Okay.
So two aspects we have seen. One is exemption. So transfer of business as a going concern is exempted.
Okay.
Another parties like we can transfer the ITC.
ITC.
So
So
that
basically, if I'm in Tamil Nadu and you're in Tamil Nadu, if I take over your part of the undertaking, it's beneficial for me because I said that ITC credit can
Yes.
be.
So if suppose you are not in Tamil Nadu also, you have to get a registration in Tamil Nadu.
Okay.
And then I should file the form.
Okay.
Tax planning.
Got it.
So you get a registration in Tamil Nadu. And once you get the registration in Tamil Nadu, you need some place of business. So get some place of business, register in Tamil Nadu. And thereafter, you inform me, boss, I have registered. So now what I will do, I will transfer this to your GSTIN because in portal there is a issue.
Okay.
If I mention any other GSTIN apart from this state, I am in Tamil Nadu.
Right.
Means the first two digits of my GSTIN is 33.
Right.
So your first two digits should also be 33. Then only the portal will accept.
Okay.
So therefore, a tax planning here is that you should register in
Register
Tamil
in
Nadu.
Tamil Nadu.
Then I can transfer it. Once you get
How
the
can I
ITC,
transfer?
you can transfer it.
Sir, but you said consideration. Now, my question now, when you're discussing, I came to know, can consideration be zero as such? Like can I gift it? Like
Yes. So it can be consideration, can be, even monetary, non-monetary.
Okay.
So even it can be like a gift also.
Okay.
If there is no consideration, the question of GST does not arise.
Correct.
Because only 4 activities in GST are chargeable to GST without consideration. And like disposal of business asset on which ITC avail,
Okay.
or related party transactions, or the second aspect is like distinct persons, or import of service from related person or principal agent. This transfer of business per se will not come into these 4 categories.
Okay.
So when there is no consideration, the question of GST will not come.
Okay.
So when the consideration is there, then also it is exempted.
Got it. Super, sir. Very nice. So because why I asked about consideration is if you see that sale, lease or otherwise, you see the question sale or otherwise. Even in 180 subsection 1, it says sale, lease or otherwise. Now that otherwise there was a case law. What is otherwise? Is it like gift? Is it like mortgage? So if I am an asset, I have ITC tobacco unit. If I give it to ICICI Bank and take 1,000 crore loan, is it a transfer of undertaking?
Yes.
So based on that, they decided that this basically I'll use interpretation of statutes also because it is very much essential for every chartered accountant to know or CA student to know. That's called something called ejustum generis, as you all know, sir. So that is sale, lease or otherwise. So otherwise should have the same nature of sale or lease, which means there has to be transfer of ownership and there has to be good consideration.
Correct.
So here if I gift it, okay, ownership is transferred, but consideration is zero. So that is not called otherwise.
Okay.
So basically this it can't be mortgage also because in mortgage you will not transfer the ownership.
Ownership, yes. Title
So,
will be with you.
title will be with you. So the only part of otherwise in that particular court case was, they discussed that to be something called usufructuary mortgage.
Okay.
So it's a weird name. So usufructuary mortgage is an English mortgage sort of a thing,
Okay.
and in other parts of England, so where ownership is transferred immediately to you, and later I'll buy it back from you. It's like sale and buyback sort of a thing.
Okay.
So in only those things are covered. So the conclusion, my dear friends, would be, I mean, it was an amazing discussion, sir. Thank you so much. Many things I also learned. And guys, to be honest with you, this cannot be scripted. That's the best part of it. So he is telling something, I figured out something, and I tell something, he'll figure out. That's how awesome it is. That is why I'm telling, we are gonna give you the best possible, what the product which is there with you. Lot of discussions we'll be doing. We'll also be learning a lot. That's how it is going to happen. So if you see sell, lease or otherwise is what it says. So otherwise, in conclusion, otherwise cannot have gift or mortgage. And similarly, when there is gift, there is no concept of consideration, so no GST. So this is what we had to discuss. Now let's move on to Chinmaya sir and ask him what part of FR and AFM you can say. And in fact, all three of us are directors in our respective companies. So he will talk more about that. So over to you, Chinmaya sir.
Thank you, Punarvas.
Yeah.
So after listening to these discussions, I feel I don't know so many things. I really don't know what I don't know. Anyway, I would like to have these two aspects. One is FR and SFM. As far as FR is concerned, you can apply.
You said it as renamed it AFM, sorry. So
correct.
Yeah.
It's in DNA now, so I have to insert
AFM.
in my movie. I have to take it out. Yeah.
Yeah.
AFM. So as Punarvas told, we are all directors, not in same board, but different board. We are sitting here, but no sitting fees yet. So that's the beauty part of it. As far as Ind AS application is concerned, regarding Ind AS 19, employee benefits, whether it includes directors.
Oh, okay, nice.
There was discussion regarding whether directors, executive, non-executive. Ind AS 19 is very clear. They are employees for employee benefit definition.
Even if it's contract for service.
Yeah, whatever the amount paid to directors will be employee benefits.
Oh.
That is one part. We are going to report that way.
Okay.
And second point regarding related party transactions. So payment made to directors should be reported as a related party. So there also there is directors means they are related parties. Then Ind AS 1 we can apply where we talked about going concern. So if the sale of undertaking is so severe that once you sell, the existing company has to be taken out. Then the question of a going concern may be affected. The financial statement has to be prepared on recipient basis as if everything is sold on same day.
Right.
We can apply Ind AS 105. It's called as non-current asset held for sale or discontinued operations.
Okay.
So if you're taking out undertaking completely, that means the reporting financial statement should be such a way that when you say revenue, it should not include the revenue of this undertaking from this year, previous year. When it's the expenses of whatever salaries, finance cost, depreciation, it should not relate to this undertaking. You take out that. And the net effect, you show it by one line. The profit or loss from discontinued operations in the most accounts. I think I'm just thinking anything else is there in the Ind AS part. Coming to AFM, financial management. One is regarding the sale of undertaking, as Tharun sir asked, whether it was a good decision or a kind of thing to be considered for financial management prudence principle wise. Should it be done? It depends on the context. Just to go to one practical example, in March 2020, Reliance did this, not exactly same, similarly. So Reliance issued right shares and they received money and they've also sold a portion of it to a Facebook as a strategical partner.
Okay.
As using that money, they repaid off all the loans. So their objective wanted to become a debt-free company. So that was their objective. 2 years later, they took a loan from foreign banks. That's a different issue. That is one of the aspects which to be considered. So whether it is a good thing to do or not, we need to look at many more other aspects. But one last point, again, to take away as a practical aspect, payment made to directors is an important corporate governance because it's like MLAs deciding their own fees.
Correct.
So board of directors deciding their own remuneration, how much? Is it commensurate with the company's operations, profitability part? We see especially in public sector undertakings, private companies, this practice of taking away the money, siphoning of funds. You are a director in a company, you show sales, you show your expenses and take out as employee salaries. Then you sell this to somebody else and sell the company and you run away. So those type of companies we would like to avoid investing. So the remuneration what is paid is it commensurate with the efforts you have put in and the history of it. Like last year you pay 5 lakh, this year you pay 5 crore. That is not acceptable. That means the director is likely to leave the company. So those are the things we have to keep it in mind. And one last point is again for future maintainable profits, there was the increase of fees discussion over there. So what we should do is we should consider the incremental fees also for calculating the future maintainable profits. It is not just the fees in the past, it is likely to be paid in the future. So these are the things. So one more point I would like to ask Punarvas sir. There is sitting fees and there is some other fees. There is also Schedule 3 managerial remuneration limits.
Right.
So would you like to throw some?
Sure, of course. I wanted to tell that. Great. Thank you for asking. So managerial remuneration is of two types. One if you are a loss-making company and one if you are a profit-making company.
Correct.
So if you are a profit-making company, it will go to 197, which says then all directors put together can take 11%. Now this all directors will include everybody. Managing director, old-time director, normal director, independent, whatever you can. Even woman director question is there. So now one more question will arise because it was there in this question. Are all independent, should all women directors be independent directors? Now, if I just say should all women directors be independent, the feminists will wake up and, they'll bombard me. Please, I'm just telling, should they be women or should they be independent woman director? Right, is the question. So, as per SEBI regulations, for all listed companies, there should be at least one woman director who's also an independent director. That's the regulation. And as per independent directors are concerned, of course, as per law, there should be 1/3, and as per SEBI, half of the board should be independent in nature. And even if you see all these board of directors of all these big companies, they have more than half as independent directors anyway. So now coming to the question of remuneration, all these people will get remuneration as per 197(1). It is 11% of the profits. 11% of the profits, as you know. But the thing is, in 2017, they also made a very small amendment which has far-reaching consequences, that you can give more than 11% also with just ordinary resolution. So with like for example, Ambani can sit there in his because he has more than 50% stake directly or indirectly. So he can just pass a resolution and take more than 11%. It was a minor change for the election purposes which I had done the other time. So anyway, so that was 11% you can take. As far as when it becomes a loss-making entity, then you have your schedule 5 coming into play, where there are certain percentages, 1%, 3%, all those things, 5%, 10%, all those things. The
limit based on capital employed.
Yes, it is on capital employed. It is the effective capital, it's called, based on capital employed. So those are the things which are there. So here in this question, they have not given about whether it's profit making, loss making. So that's there. Irrespective of all these things, sitting fee has to be paid. Now, sitting fee for listed company limit is 1 lakh per meeting. Now, is it per sitting or per like 5 times if I said, will I get 5 lakhs? That's a different question. But it's actually per meeting. So, if the meeting is adjourned also, there is a MCA circular which says that you will get 1 lakh per meeting. Per sitting actually. So, if it goes for same meeting is held on 2 days, you are entitled to get 2 lakhs. But all these things are governed by the internal mechanism of articles. So, articles will fix the maximum amount to be paid and the procedure, but it cannot go beyond 1 lakh. So, in this question, they have told that they have increased, they can increase, no problem. So, they can increase that, but women director, independent director, all these people should be well within that 1 lakh rupees. They cannot, 1 lakh rupees per person, not overall. Otherwise, there will be peanuts left. So, per person, that is how it is.
Few follow-up questions on that.
Yeah.
So, will the remuneration include the sitting fees also?
No, as per 197, sitting fees outside. But the thing is, what I am trying to tell is, if you are an executive director, they will not get sitting fee only because it's part of the remuneration. In the agreement only they will mention sitting fee concept only is for the person who is a professional director. You are coming outside the company and sitting.
So you will not get paid.
So MD etc. you are supposed to sit. Others you come and sit, I'll pay.
And for calculation of this, I think section 198 net profit. That definition we can subtract sitting fees also.
Yes, sitting fees will be subtracted. So that only for the calculation purposes. So this is the idea. This is what we have to discuss. So anything else in your
it was great brainstorming session.
Yes. So guys, again I repeat that all three of us are here. So we do not. It cannot be scripted. So we basically just read the case law. This is just a snippet, guys. This is just a teaser. You will see. In this jailer movie, you would have seen a teaser initially where Rajinikanth will just show his shoe. That's what we are doing. That's it. After that, each and every case we're going to discuss in depth. When you see the questions that come, which Institute has asked in the previous attempt, that there was also paper 6F, the same was paper 6F, you will say you can close your eyes and answer. I'm not joking, because the depth that we are taking, each of us are experts in our own field, and in this we are coming together. It's a power force coming in. You know, it's like your Avengers movie. All of us are coming in and it's the Avengers assemble, so to speak. So it is going to be awesome, guys. Each of us have our own, strengths. So we are going to merge all our strengths and discuss this. It's going to be an amazing product. And again, let me repeat, it will be available. We're going to record sometime in October, November, right, sir? Yes. And then it will be, by November 15th or something, it will be available to you. Or maybe let's take, safer November end. But guys, you need to pre-book right now by paying 1,500 plus GST, and only then you will be getting the pre-booking amount of 7,500. Otherwise, it will be 9,000. It includes everything. Again, I repeat, 180 plus hours of discussions like this, plus individual subject revision, which is specifically recorded. We are not going to cut some like 2-year-old video and do it. We are each going to specifically record for the purpose of paper 6. Let me be very specific about it. And also, after you revise each of these areas, you will come to our discussion, panel discussion. You will be an audience, and we are going to discuss many things. We are going to learn many things, and we are all extremely excited about this. And again, I repeat, as sir rightfully mentioned, through reliable sources, paper, the group number 2, 4, 5, 6 will be tricky. So gone are those days you just read some summary book and go and vomit in the exam. It's not going to happen, guys. They are going to ask tough questions. They are going to ask, and in fact, sir, DT and IDT, if you see, last 3-4 attempts, paper is getting difficult, sir. It's not going to be easy anymore. And first group anyway will remain, but second group is the true test of a future chartered accountant. So things are very excited. We are excited because we always wanted this to happen. So whatever happens for the good. Only the cream will survive. I know you guys are the cream. If you study it the right way, it's going to be very easy. And as I told you, it's the first time ever we are doing in the whole of the country, and we are super excited to do it. And this is what it is. So please like this particular video, subscribe to our respective channels, my dear friends. It's a collaborative force coming together to give you the best. And as you know, we are always for the students. And if you see, the fees is extremely reasonable for the content that we are going to give you. You have already seen it, right? So please do the pre-booking so that we can launch the product. Otherwise also, you can take your time, but September 1st is the date. Before September 1st, you can do. Sir, I want the whole second group. That also is available at a very reasonable rate. Till September 1st, it is 29,999. Details will come. All the 3 subjects, 29,999. So you can check it out, okay? So on that note, sir, thank you, Chinmaya sir, and thank you, Tharun sir.
I have 2 points.
Yes, sir, please, sir. Sorry, sir. Yes, sir.
So, guys, really, I'm so happy that I was expecting this to happen, and finally it happened. And I really thank my team also, so who are really putting in efforts in making this, because don't see as to the price is high, etc. and all. Certain times, there are lots of cost will be involved. So which you don't know, because you guys are seeing only 3 of us. So there is a lot of work that is going on our back, and so every cost is also involved, and definitely we will try to give you the best for whatever money that you are spending. So we have value for money, and so definitely, so we have to keep that in mind.
Yes, sir.
And we will also continuously come out with various updates, as when I say releases some RTP related to this. So you will definitely come out with that, and we are there always till the end. You go for your exam, so we continue to be there, and kindly support us by encouraging this initiative, and we really don't have anyone else than you. Thank you.
Very true, sir, because we are here because of you guys, as simple as that. So, of course, thank you, sir, for mentioning the team. Guys, there are so many people working on this behind the scenes, the unsung heroes. We are here, sitting here and just talking, but it is the unsung heroes, the people behind the show that really matter. And first of all, we should thank Tharun sir for giving us the wonderful opportunity to record all these things here. It's an amazing setup, and we are having a lot of fun, my dear friends, and we're going to continue to have fun as well. So, parting shot will be by Chinmaya sir. Thank you, guys. See you. Yes.
Yeah. Putting it in very simple words, it's a journey. Be part of it. Thank you.
Amazing. Thank you. Thank you, guys. See you. Bye.